All right, hello, hello, hello. Looks like you can hear me. Just let me know if you can or not. I updated the streaming software right before. I was like, you know what? I got a couple extra minutes. Let me hit the go button here. And may have worked, may not have worked. I don't know. Half the time when I do the upgrade, it kills everything. But I'm not the only one. A friend of mine that streams also, he's like, yeah, I have the same problem. He's like, every time they do something, and he's warned me, he's like, if you go to Windows 11, or it's like, when you do, yeah, look forward to it there as well. It's like, great, lovely. That's what I'm looking forward to, right? Gotta love that. All right, so, yeah, going into the morning. All right, so the UK. Interesting time in the UK. I don't see Truce being there long. So, yeah, everything that she did last week, she's like, hey, you know what? Never mind. Forget. Everybody hates it. So, yeah, a couple ways that you can take this. One, that the new UK government will kind of have a plan, but then if they receive a lot of pressure, they will make changes to it. The plan was considered, favorable to the rich. Tax cuts. The rich don't belong. Tax cuts, and people are mad. Again, it's being rich is a bad thing. In the world this day and age, you're not allowed to be rich. Yeah. Inflation is still going out of control. They thought they had a way to increase growth to help everything, and yeah, just kidding. We're going back. So yeah, it'll be interesting. Overall. Turns out that it's kind of a little bit more of a positive sign, although we're seeing it retrace a bit now. You're seeing that in the pound dollar, euro, pound, and pound yen. Over the last 24 hours, it is still up, but again, a lot of those changes happened this morning. So yeah, a couple other things that are kind of noteworthy. Again, dollar CAD. You're seeing dollar CAD is down 107. You may say, well, what the heck happened with dollar CAD? Well, pretty simply, OPEC is stomping their feet. And we got some news from OPEC that OPEC is discussing a potential oil output cut. Wait, you must be saying, wait, what? What? A cut? Right? Wasn't the debate over the last 2 months, increasing? It's like, hey, listen, they need to increase. And, Russia's bad. And yeah, we're going to bring Iranian oil back on because we need more oil. And now we are hearing about a cut. And the reason why is because, again, OPEC's mandate is price stability. Going from 100 down to mid 70s is not stability in their eyes. Nice for us, but yeah. So interesting that we're seeing this with oil, talking about potential cuts, and because of that, oil is it's kind of skyrocketing, right? It's going higher, and because of that, again, that is considered CAD strength when it gets higher, and again, that's why we're seeing CAD strength coming in here because it's not really dollar weakness, right? Because dollar strength. Dollar weakness, but that's a pound thing. A little dollar strength over here. A little weakness versus the Aussie, but again, it's because we're kind of seeing it's kind of pushing up in the upper level. So, yeah, Swiss. Okay, Swiss was expected to have a slower increase, but they actually had kind of a pullback. And again, for the Swiss, that's considered a little bit weak, and you can see that weakness is carrying through in the last 24 hours pretty substantial. Because, again, if they're losing, if the CPI is going down, there's no reason to continue raising interest rates in an aggressive fashion. And there was also some news about how Credit Suisse is in trouble. Right over here, talking about this one. That we're waiting for a kind of a crash. And, again, Credit Suisse seems to be the target, and they're saying it's not going to be like a Lehman Brothers thing, but again, whenever you see Swiss, people immediately look at the Swiss franc. And again, obviously, different things there, but people are still looking at it. Yeah, most of it is going to be the UK kind of comments. I think they're just a complete debacle right now. They're totally confused. Yeah, I know. Yeah, the Swiss is always a weird one. Like I said, it's one of those ones. Like people love it or hate it. It's not my favorite. It does have some really, really great trades, but and they're like really like textbook trades. I mean, they're really like, oh, that was a great setup, but they almost they almost become like so few and far between. Where it's like sometimes it just it's just gone sideways forever, and then all of a sudden, bam, it's there. Like man, that one was gorgeous. So for me, it's there are people that just trade the euro dollar, right? And there are people that just trade the pound dollar, and the dollar yen is another one of those ones. I don't feel that you could trade just the Swiss. if that makes sense. Like there are some beautiful trades, right? But I don't feel like it gives enough setups to be like the sole thing that a person trades, if that makes sense. And again, that's just my opinion. Maybe there's somebody out there that disagrees with me and says, nope, absolutely, that's all I trade is a dollar Swiss. But it goes in long periods where it does like nothing. It's like, oh, and then it gives a good setup, and you're like, this is awesome. Look at this. Why don't I look at this more? Yeah, the 2015 is also a real, and again, in reality, Jeff, that could technically happen with anything, but again, it's because that's why we go to, currencies is supposed to be it's an asset that has volume. Now, a lot of volume has come back into currencies, so, it was that was kind of the perfect storm, and that's why we don't trade the lesser ones, right? There are plenty of nations out there, but that's why we don't trade a lot of the other currencies. We focus on the majors. There are many cross and hybrid pairs out there. The spreads get bigger, but Swiss is one of those ones that you didn't expect it to happen, but the reality is it can. And it's the reason why all the currency firms now have the warning that like you can lose more money in your account than you have in there, which is technically not true. They put it on there because, they wanted people to pay back then, but why would you pay? It's not your problem, right? It's supposed to close, their fail safes, broke, not yours, right? So it's like, yeah, good luck. But that's why they're trying to get people in. It's like, oh my God, if it ever happens again, you could lose more. It's like, nah, not really. Because the way that it works is that you're not really trading on the open market. You're trading against the broker. So if it happens, it's the broker's problem, not really your problem. But yeah, not everybody understands that. It's whatever. All right, so today we've already got some data in from the Swiss. We have 10 o'clock, the ISM manufacturing PMI, and kind of holding firm, a little bit less. We'll see how it comes out. We got some, some pound. What is man doing? It's a panel discussion, so panels typically aren't that big. And then tonight we have the Aussie raising 0.5. I don't think this is a bad one. I love Aussie night trading. I think Aussie night trading is great. This is predicted to be 0.5. I think it'll probably come in 0.5, and I think the real trade here tonight will be what the rate statement says. Kind of what's next, right? There's an interesting article out this morning that I saw on CNN. I actually linked it to my phone, basically talking about the 7 warning signs. Everybody is in a general consensus that it's not a matter of if, it's a matter of when we go into a global recession. Some of it is being actually led by the dollar. The dollar is causing it. But one of the things that they talked about in there, and I forget, it was like daily, I don't know, New Daily or something like, I don't know. Basically, it's one of these, it's one of like the firms. Like they've predicted. The only time they've seen recession at these levels was 2008 and 2022. I'm sorry, 2020. They're saying that it's there again, and everyone's like, "This is a highly credible." I mean, their track record has been spot on. They are also saying that it's not a matter of if; it's just when we go into this recession, and that the Fed is going to continue to raise. And it points out basically, I mean, this is a kind of gives you the same idea. There's many articles out there, but basically because of the sharp rally, a lot of people go there. In a recession, a lot of people send money towards the dollar just because, again, having the larger economy and the fact that it is a reserve still, and that commodities are priced in. As of right now, this is why it's so important for us not to lose our reserve status. But people tend to put it there in times of recession, right? Because again, we have the ability to kind of push the limits as more than other countries can. Not that we should or deserve it, but we do. That's just the reality. Talks about though the more expensive the dollar gets, the problem that it causes globally, and that the Fed is, although it's not their mandate, it should be their responsibility to also think about the implications of everything that they do. So again, I think what is next, I think, is a big deal. And again, starting to see some of these CPIs drop back down again. I think that's where the real trade is going to be, especially tonight. And again, it's too early right now. If we see a soar up in the Aussie, right, which it's kind of they're all going up right now. This is actually a short trade. So I think there's a short trade set up here. Now tomorrow, kind of the same thing. No, this JOLTS data tomorrow morning at 10. We'll talk from now till then. We'll get on just in time for that one. This is actually what I'm looking for the entire week, right? This is like my most, like, I don't care about non-farm payroll, right? I care about this JOLTS because remember, the Fed is so focused on crushing demand, but when they say crushing demand, they mean demand here in JOLTS, the job openings, right? if this continues to rise, companies have to slow down, right? The job openings actually going up from where they were last time. And again, last time was actually a pretty big surprise. They're like, oh, it's going to be back down to 10. And it wasn't. It was a huge number, right? And it was an adjustment from before. And it's going up higher again. That's the exact opposite thing the Fed wants to do. So, doesn't look like the Fed is going to put their foot on the brake yet. They're leaving it solely to the floor. So, yeah. So that's I'm all over that one. And then again, New Zealand tomorrow night also raises, which this 3.5 is substantial. Coming in at 285, that looks big, but this 3.5 actually does matter because that brings us back into the carry trade. Now, 3.5 is nothing when we're talking about a 10% year-over-year increase in rates. But remember, where else are you getting 3.5% on your money? The answer is nowhere. Again, because that would be going against the yen. So what it does is it brings the New Zealand and the New Zealand yen pair in particular into kind of the carry trade where it makes financial sense, right? It makes financial sense to park yourself over there just for that rollover rate, right? That's what we're kind of going to be dealing with in the next 24 hours. Going over the charts. Obviously, it's Monday. VIX is always a little bit weird. Again, it is pulling back again. We got that surge on Friday, right, which is not what you want to see. But we talked about how it could turn really bad quick. And it did. And, in the overnight, did nothing but crank back down again. So that's decent. And again, because of it, all the indices are there. And again, I said, the way that we ended last week was kind of not surprising for me. I think this week, as people start to look towards non-farm, I think that's really where a lot of the eyes are going to be looking. And again, the JOLTS data, again, JOLTS is something that, 2 years ago, nobody even cared. It was like, whatever, no one cares about this data. This data doesn't mean anything. And it didn't. It wasn't really necessarily like a big deal that people were like focused on. But right now, it's considered like the number one driver. So you got to kind of look at this and take it with a grain of salt and be like, well, this is a new thing. When they talk about, destroying demand, this is the demand that they're talking about destroying. And what's interesting, too, again, a bunch of articles out there in regards to labor. There are people that are like, saying that they're getting PTSD because they're being required to go into the office. And because they're told they have to go into the office 2 days a week for office culture. It's like, yes, because they want you to come back in. The remote work aspect. I mean, my wife, she doesn't want to work in an office anymore. She's like, I'm so used to working from home. I don't want to go back into an office. I'm like, okay. All right. It's actually becoming a nationwide thing. And then again, what happens is we're having empty office buildings. A lot of people that supported people working in office buildings are also losing their jobs because they can't afford it. So there's a lot of repercussions going on out there. I think seeing this kind of run up here is probably, not surprising. But again, remember, the market moves in two fashions, right? Impulse correction. Is this a kind of a correction move before we see the next big impulse? This jobs number tomorrow, that's not moving in the right direction. I mean, yeah, it looks great for the economy, but then they're even more like renewed expansions, apodors, it means that they need to put, what they've done has not been enough. They need to go harder. They need to go faster. And that's kind of not what we want to see. So, green today, you like it, but at the same time, you're like, what's going to happen with that one? So, it's a little cautious. Oil, up 6% already today, right? Why? Well, that's OPEC. And this is OPEC basically telling you, oh, yeah, you want to come all the way down? Okay, yeah. We need stability. We need to bring it back into a range that kind of makes sense, right? So, yeah. Which is kind of funny because we're going into a recession. And again, OPEC's not stupid. OPEC knows we're going into a recession. So again, this was like a temporary gas halt. And again, all the games that are being played, we're not going to have enough with Russia. I mean, again, China locking down, global recession. OPEC's not dumb. OPEC's like, yep, we're going to get it. OPEC is very smart. They get ahead of things, so you got to give that to them. The Fed has been very reactionary. OPEC is very forward-looking. So you got to give them that. I don't necessarily agree with everything OPEC says. I kind of understand why they do a lot of what they do. And I understand kind of their mandates and things, but they are very, very forward-looking. If OPEC is already like, yep, everything we see is saying recession's coming, recession, people don't need gas, we're going to get ahead of it before, prices driven down naturally, and then we got on top of that recession. So the markets are starting to price in that recession. the markets and what these large institutions are talking about don't always match up. Like, I think the EU finally is in agreement that it's not as transitory as they thought it was. I mean, the US, I believe everybody at this point understands that it's not actually transitory, finally. So, yeah. So that's why we're seeing the big movement over there. And again, natural gas, right now, again, we have no disruptions. And again, there's not an OPEC pulling the strings the same way, right? And again, remember, we're not blocking everything else, and it's whatever. And then again, gold, silver, both rallying higher as well. Silver up 6% today, and again, some of that has to do with China as well. But again, positive. Why? Because again, we're preparing for what's coming, right? Preparing for what's coming. All right, let's start out with the Aussie. So. Last week, we were sitting right around here, right? We were starting to smash through this level, and we're looking for a pullback. And we said, hey, listen, we've already broken through. That's a great little entry. Look for it to go lower. It turned a little bit deeper, and we expected it to turn right here, right actually where it is right now. Actually not right now, but the 64.01. It turned where it should have turned. Obviously, it didn't need to make it all the way back down to the bottom, but going into the new week, we can kind of extend it across. So again, the short came through that area, and you can see it's still really kind of bouncing. It went lower. There was a 1 to 3 there. I don't need to draw it. You should be able to see that with your eyes. As it came up and it started the base, it's going back up. So right now, I would say the areas that we're looking for, and again, this is in preparation for tonight. We know that we have the rate raise tonight, and you're seeing all this go, this pre-market raising. That's not bad, right? So I would say look for, depending on where we are, I would say up here in the 65.18 range is probably where we're going to be if we continue the same path for that interest rate rise tonight. And again, it's already, the market, this is not new. I mean, it's not like they just said, oh, by the way, we're going to raise it, or we don't know. The market's already had the opportunity to factor this in. So remember, a lot of people will look at that, not understand that it's already factored in. And then as soon as it raises, they're like, that's it. It's a long signal. Go long. Well, in reality, the market's already got it. The market wants you to go long because they want to take profit. They've already raised it. So if we can continue moving up, look for shorts off of 65.18. On the other end of it as well, I think, again, this is probably a decent level to look at. It kind of had a deep test on there, but right now it's been pulling away so much. I think that we could turn this into a green. And again, depending on the time of day and what's going on, if we do get a short signal, I mean, it could potentially just turn and roll back down. This becomes a target. But right now, just looking at this, I would say that this is where the sideways channel is, kind of smashed in here. 65.18 and 63.74 on the downside. Now, Aussie yen is also doing the same thing. And look, we also have a level up top that, again, has been hit, had a pretty decent run, and was front run last time. And again, this is not a new thing. We've talked about this one before, and we've already had one trade successful out of it, but the 94.14. Also rallying up again. It's only about 30 pips. This one may start to turn a little bit early because, again, this one could potentially be even a 1030 reversal. We'll see where it goes, 30 pips from now. Again, I don't know. We got that ISM number. I'm going to see what ISM does because ISM is going to move around the yen a little bit because it's going to be based off the Dow. So if we're unable to break and we form a new high, what I would say is look to see if this is a reversal. And again, it could be a new short here. If we go through and start the base, don't take this until later on this evening. Look to see where it stabilizes itself. It may actually push a little bit higher. It may actually go all the way up. And again, that's quite a run. I mean, that's like 80 pips. That's a lot from now till then, right? But we may be able to pull something right off this level, which is the old 61.8 from top to bottom for fib-wise, right? The old fib from here to here. Everybody knows, everybody loves, fib traders love the 61.8. I would say that that's another potential short. So if we come up and are rallying through here, again, maybe we wait for it to go a little bit higher. But, again, I would say that this is a potential 10 o'clock short this morning. And again, either of these two could be good depending on where we are tonight. And that data comes in there. Yeah, comes in right there. So you can see we got some time, and it's kind of close proximity now. This is a little far, this is a little close, but we got to see what the yen does now after the ISM number comes out. Hold on one sec. Okay. All right. Euro dollar. So euro dollar. We got a little last week. We talked about the play here on Friday, and we watched price come back down. We were sitting here, and it did. It retraced back up again, and actually in the overnight, right around 1:30. The 3 o'clock open was right here. Right. And again, we saw like a 5 o'clock reversal down. It did hit it again. It did pass through the profit target. So, I mean, I'll extend it across for you guys. You can see it hit again, went through the profit on the bottom side. Right now, I would say, and we'll take this off. Right now, I would say look for targets lower. I I don't know that we're going to get the dollar strength move today like we really, really want, but it is turning off where it should. I mean, there's a level right there, and that's what we're bouncing off of. It has smashed into it, smashed into it again, smashed into it again. So these guys are going to be gone, and there's not enough room here for kind of a Harry Potter continuation. But I think bringing it down to this level again, this is a 50% trace off the high to low. I'm sorry, the low to high. That 96 level, look for that as a target, depending on what happens when we hit it, and if we have news coming up, if we have session rollovers. It could potentially be a long trade. It was one we drew last week. We were looking for the push down here. It is a target first. It's not just the number one take it. It's a target first with the potential kind of push and movement higher. Okay. So again, those two levels are fine. Maybe we get one more up the top, right? Like I said, it's a decent kind of push here where it didn't go higher. So we know we got some selling. It may potentially get front run. We're sitting smack in the middle of those two levels right now. And I think right now you got 70 up, 70 down. It's going to be about a day's worth of movement until we get there. Okay. But again, still both valid zones. I think both of them are fine. You could take either, really kind of either side of those is I'm comfortable with. Yeah. Hold on. Sorry. I had to move something around. What is that? Okay. All right. So, euro pound. So, euro pound, our target was hit this morning. 2 o'clock this morning, you can see we had this big jump down. And again, you guys know why all this kind of kicked in. We were talking about the target coming down and hitting 87.27. It did. It finally hit it. It actually bounced off of it and then bounced again. It's like, yeah, it's breaking. So right now, it's kind of set up in a pattern. You may say, hey, listen, we got a Harry Potter in here. And the answer is maybe. I mean, you can see that if I just extended it across, this is a level from last week that we talked about. It was a tested level right here. Guess what it just bounced off of? That kind of tested level. So, right now I would say we kind of need this new stabilization. If you look back to see, this is, it's a small zone. The only reason we haven't marked is because we had a confirmation test up here that those buyers were legitimate. There are a couple levels a little bit lower and really looking for the next test. There's probably a level here, right? You kind of have a little bit of a test coming in right there off of that. Probably the next level, and again, there's a nice little run there. This is probably the next area where I'd be looking for a potential, whoops. No, not that. Right there. 86.41 is probably the next area I'd be looking for a long. The problem right now is the BOE is kind of all over the place, right? Bank of England is just one day it's one thing, the next day it's the next thing. So, let's see. 40, 12. It's almost a decent little Harry Potter trade in there, but I feel like we're gonna kick off this. I feel like that's where we're kicking off of. Right? If it wasn't for that little kick, I think there's a decent short in here. Whoops. Why the heck is that so big? Right? Problem is that's like halfway through. Right? Do we really want to take the bounce halfway through? Oh, it's there. It's there. I don't know. It's a little deep in there. So, I don't know. Anyway, this is what we called for. We called for the target. We hit it. We bounced. Let's see. I want to run because this is sideways. Do we have any help? Not really. Yeah. So right now, if this was a true bottom, you can see right now the 23 and the 50. The 50's got a little something right here, right? But 23 is absolutely, I mean, I guess there's a little tiny hiccup there. If I bring this down here, look what happens. The 23 now is dealing with this. And the 50 dealing with this, right? 618 is nothing, and then the 78 is something up here. So if it moves just a little bit farther down, if it comes down to that level, and we do take the bounce off the 86.41, there's some decent trade setups coming along. Okay, so yeah, some decent stuff here. Like I said, I'm in agreement they've made the changes that everybody likes it, that you stay bearish this position, right? You stay bullish the pound, and again, bearish the euro pound. But I don't think we look for a reversal until 86.41. Euro yen. So euro yen, still playing around with this top section. There was our trade from last week. After that time, you see a hit here, a hit here, a hit here. You're like, yep, not looking for any more out of this. I mean, we're not taking it short again. It's nice that it rolled back down again, but it's been hit so many times. We're not looking at that as a sell level. You can see we're sitting in the area here. So now we can adjust it. That trade is done from last week. We could box off this kind of new area here. We can go a little bit higher. And you can see right now, 23.6 traders are like, yeah, let's go. We're long. But you can see it kind of ran out of steam here. We'll see. We'll see what direction it turns, and I think it's waiting for that number, because right now it's kind of consolidating in with absolutely no movement. So yeah, I think I still think targets are down here at 140.39. I don't know about a continued push. Let's see what the ISM number came in as. Oof, it's above 50, and again, 50 indicates expansion. Below 50 is contraction. That's kind of interesting. Oh, look at this. Look at this. We just talked about this, right? Oil, look at this. CNBC, oil prices could soon return to $100. OPEC Plus considers historic cut. Right? Interesting. And guess who just happens to be a member of OPEC Plus? The bad guys, right? The bad guys, right? Just shows how much power some people still have out there. $100 a barrel. The oil, I love it. I love when they call it a cartel. It's awesome. And you know what the messed up part about this is? OPEC had lost almost all of its power, and then magically, one administration, they've been given it all back again. Yeah, an output cut. And it's funny, we don't have many friends in OPEC Plus, if you can believe that. We don't. We use a lot of oil, but we don't have many friends there, right? All right, so we are seeing a pop now, and again, kind of seeing that pop because of that ISM number, right? That ISM number is helping us. So question is, do we slam through this and run lower, or do we push back up again? I don't know if we can rally all back up again. I mean, that'd be another 70 pips. That data is good, right? That data is good for this one. But at the same time, is it 70 pips good? I don't know. 70 pips for a proxy is kind of a lot. Yeah, I don't know if it's 70 pips good. I feel like we may start to kick up in here. And here's a question. Let's see. Short-term fast traders, yeah, I don't think it's going up. Here's why. So, again, you get those scalpers and other things that are like, I'm going to scalp everything. Yeah, just look, there's a one candle top there. If we do just this morning from 5 to 7, just this most recent push, if it pulls back up again, that's 50% people are looking to step in. So I don't think we push the top side. I think if anything, we wait for this to stabilize and look for it to roll back down again. I think we may hiccup right here, right? Because again, there's definitely some buyers sitting there between these ascending guys right here and this bit right here again. I would say look for this. Look for some profit taking here, but overall, I'd like to see what it does, and I think we push down to 140.40. Hey, here, I'll change this. 140.40 right there. Okay. Pound dollar. So, pound dollar. Obviously got the big explosion. Is this a trade that we're taking again? We had 1, we had 2, we had 3. Not really, right? And again, pushed all the way back down again. It didn't really hit a 23.6, plus it already broken through. So I would say on this one, you might say, oh my God, why is the dollar so weak? Trust me, dollar strength is coming back in. I would say right now, I do like this one for a short position, but over here, we've already pushed the zone pretty deep in there. We know that it's there. There's a little bit of a hiccup, which is okay. A 1 to 3 plants us right there. So again, the hiccups about 1 to 1 in, and then you can see that puts us before the 50. So and again, I can adjust this up a little bit. Again, you're like, oh, it did hit. I'm like, no, it didn't. There's where it was before that time. It did not hit the 23.6. Now it's a level, and there's probably a hiccup there. But you can see where the 50 is. We can still sneak it in before we start smashing into this area at 108.78. So Looking for this one, again, if you know how to set alerts on your positions, I'd say 110.28 is a decent level to take a short. Again, dollar strength is absolutely coming back in. Everything today has been great for the pound, but the reality is, does the pound have enough global influence? Is what the pound doing stronger, right? I would say it is. Yeah, their actions are stronger, although we don't know what the Fed is going to do yet. But I know right now, if that JOLTS number is higher, the Fed is going to continue its process. And the pound thus far has really only been doing like 0.5 or 0.25s, and they've finally gotten to 0.5. We're doing another 0.75, and we are absolutely ahead. When you look at, I have it only on the monitor. Hold on, let me grab it. Where is it? Is it this one? Yes. Currently, right now, right, the United States is at 3.25. Right, the pound, even though they've had more raises, they've done more in a row from us, is only at 2.25. So even if they go big and raise 0.5 next time, guess what? We're raising 0.75. And that's what everybody says is already in, right? That's the baseline is 0.75. That puts us at 4, right? As I mentioned, 3.5 is a big deal for the New Zealand. While they hold that, there'll be a big push for money there. And then when the United States does a 0.75 and we go up to 4%, guess what? The dollar yen becomes the carry trade. Right, we take over the carry trade position. Canada is the next closest right now. I mean, Canada's at 3.25. They're right behind us, right? Canada and the United States are both at 3.25. New Zealand's at 3, so New Zealand is pretty close, right? New Zealand is pretty close. But yeah. Some of these things are funny though. Some of these are ridiculous. Like Brazil is at 13.75%, but it's kind of like who wants to put their money in Brazilian currency. Hungarian, also 13%, right? That's safe place. And then Turkish, right? Theirs is at 12%. But does anybody want to put money? And actually, Turkey's cutting. That's the funny part. Turkey is cutting. Not going in the right direction for everybody. But yeah. So chasing interest rates is not always the most safest thing in the world. Anyway, so again, I would say look for some type of a top. I like a rollover. We got a couple areas up here where this one can turn. So I think it's a matter of time. Let the pound have its due today. Let it adjust, and again, look for turns and shorts. Pound yen also pulling up. So we were looking and hoping on Friday. We talked about how we're sitting right here. We're at a zone, and we may have gotten it. And again, we hit it. We came back down. We hit it again. Kind of pushed back down again. We hit it again. I mean, literally, there's 3 hits right here, not even including. I mean, the original zone formation is right here. There's 1, there's 2, there's 3, there's 4, there's 5. You think this is holding? No. So right now, what I would say is when this does come through, when it finally does break through this 161.35 or 35, we're looking for this to pull back to 155. Okay, so. We're not quite at the 78, although I'm ready to pull the 78 off of this one. Ready for this one to be, again, we can adjust it a little bit. Ready for this one to turn and roll, kind of for all the same reasons, right? We need some yen strength coming in, and, the unfortunate thing for the yen is the dollar is still going to continue to raise. I think that there will be another kind of intervention there, but the next intervention that comes in, if you look between these two, who needs it more? A UK intervention or a yen intervention? I mean, the dollar yen has basically almost gone all the way back up to that 145 number, which was bad. Do they do it again? I'd say probably, right? I'd say probably. Will they do it forever? No, but I do think that they continue to do it. Like I said, this is more of a dollar strength thing. The yen can't get any weaker, right? And again, this is kind of global recession is what this is. So I do think there's a turn in that one. But I don't think all the pound's problems are solved. I think the pound will start losing some steam. And again, it's nice that they've reversed things. It's going up. But once this news is baked in, I think it turns and rolls. So look for a break of 161.35. Dollar CAD. Why is dollar CAD going down? Well, and again, there's your nice little retest. Dollar CAD is going down because of oil. Oil is now up 5.4%, pulling back a little bit. But that's because OPEC is like, yep, sorry. We're gonna do some cuts, I think. Yeah, we're gonna do some cuts, right? We're going to do some cuts. 1 million barrels a day, right? We were complaining before, like, oh, my God, can we get an increase of 430? Can we get an increase of 500? Oh, my God, that's such a relief. And now they're talking about, going to get 1 million. So, yeah. Pure dollar strength, or I'm sorry, pure CAD strength. So again, we talked about targets at the top side. Targets were hit. We were back down on the bottom side of the zone. I don't think this is a level that holds. I mean, there's a level on the bottom of this. We kind of drew a channel sideways. You can see 1, 2, 3, and 4. And we mentioned the top side. We had 1, 2, 3, and 4. We didn't expect it to hold, and it did. It went up. It grabbed that zone, turned. We got the confirmation entry. Short. I think right now, again, we look for this to break. Probably take a bounce off of 136. And again, we still have an alert. It's still good. We're waiting for it when it breaks through 135.60. I'd like to see where this one goes. Again, we have the dollar strength getting ready to roll back in. Market's prepared for that, though. I mean, the market has already said they know that that one's coming in. Question is, if CNBC is correct, or the person that they interviewed that said, we could have $100 oil coming back in the market again. Right now, oil is at 83. If we jack this up $20, how much strength does that actually bring in? And what does that do to Canada? I mean, Canada is just right behind us. They are literally, they're 3.25. We're 3.25. We know we're raising 0.75. I don't think that they can do a 0.75 next time, but they're right on our heels, right? And if we do a 0.75 and then say that, we're doing the 0.5 like Bostic was saying last week, what does the market feel the U.S. is going to do? If they go 0.7, 0.5, is that the weakness we need to finally slice through, right? That's the big question, and that's what we don't know. So again, I would continue looking for this one to drop today. We may get some buying coming in. Look for and again, set an alert at 135.60 break. Again, nice little 60 pip run all the way down to 135. I think that's probably where it needs to be. I don't think Canada's really that far behind us as far as everything else. I think their data is probably a little bit better, and again, they're not getting the global influence at this point. Yeah, I think they're, and again, all things that kind of hurt the U.S., right? The oil thing, remember, that's not a hurt Canada, that's a help Canada, right? Because they are an oil exporter, basically to the United States. All right, so I like that one. Dollar Swiss. So we talked about dollar Swiss going up, and that's what we had. We can see, yes, we were sitting right here. We just hit our full profit target on Friday, and we went up, and you can see it did. It came back again, grabbed some more, and came some more, grabbed some more, and then again, yesterday, late last night, it did give us the push forward. And why? Well, we know all the problems with Credit Suisse and people talking about, what's going on over there. Having this data come in as a minus 0.2, saying, oh, you don't need to raise it as much. It's already working. That's negative for the Swiss. We're seeing it pull back up again. I think we look for 99.50. Right now, that is still 60 pips away. Again, that's kind of like I don't know. Let's see. Actually, I'm curious. What is the daily ATR right now? Daily ATR is 107, but I would say that's artificially high. It looks like it is. The traditional is 60 pips. We kind of split the difference. We're looking at approximately 75. So it's about a day's worth of movement away. Right, it doesn't help with us pulling back. So yeah, I still think we're good for this one. The 95.50. Yeah, let me make that flat. Right there, and same thing to the downside. I think we talked about this level being, hey, listen, this is a confirmation bounce, and we got it here up. And again, if it comes in bases, it goes back down again. I think right now, because again, this was a buy, that's a target for any shorts. But we're talking about the new range. This is kind of our new range, top to bottom. Actually, right now it's this, and you can see this piece right here is right at the 50. So kind of interesting. Yeah, that would make sense too. Yeah, a lot of this one lines up for technical trades, but we need to go just a little bit higher. Give us that dollar strength. Give us that 99.50, and then again look for the rollover. Okay, and I'll tell you right now. I mean, it's the JOLTS data. This JOLTS data, it's expected to be, the market is factoring 11.30. Imagine if this comes in at 11 flat or below what we were last time. That's all we need is for dollar weakness to come in. Not that the Fed's going to pull off, but it's not so much the 0.75. It's the, 0.75, and the next time we're going 0.5, meaning we're almost there. That's the forward forecasting that will turn and roll this one. Now, Japanese yen. As you can see, we were back up to 145.32. We weren't really kind of up top. And again, there's not really any selling over here that we can use. Same thing. Look, one hit, 2 hits, 3 hits, and then it started the base. You're like, yeah, it's breaking. It's breaking through that 145 target. And that's kind of where we're at. You're seeing, obviously, a little bit of yen strength coming in off that, that move. And again, the data, the ISM is not necessarily the best for the dollar, which again shows us that dollar weakness. But right now it's kind of in the same area. I mean, we've been floating this area since the 26th, and we kind of go up and down and up and down. it's more or less channeling sideways. It's hard to say that this one is in any type of a trend formation right now. And again, we typically like the trends and likes the pullbacks, but pulling back to where? Both levels, top and bottom, have been hit. Kind of a hard one. Now, the dollar yen does become much more interesting after the next interest rate rise. Because remember, yen is technically listed at minus 0.1. Right? Minus 0.1. Our 0.75 brings us to 4%. Right? So 4%. So on a year-over-year basis, we know the inflation rate is up at 8.6. But will we continue to build that inflation rate over the next year? Because remember, if you start putting it in now, you're getting that 4%. Right? You'll start getting that 4% immediately. Right on your money. So, yeah, kind of interesting. I'm kind of curious if we can get back up to this 145.50 if we'll see the BOJ intervene again. Maybe. But right now, unfortunately, not enough to trade out of it. So cryptos. Yeah, I would say cryptos, not really anything. I mean, yeah, technically it's listed in the green, but is it really? Not really. It's flat. It's green from where we closed, but not really movement. I don't know if you guys saw, Miss Kardashian got busted. Yep, she already settled with the SEC, but is under continued investigation for another allegation. As far as the crypto market goes, just goes to show you, a lot of these big names try to cash in early on crypto and made some statements they should have made. And yeah, soon as it got brought up, she settled immediately. I guess it was something that she didn't want to be dragged through the news, but she's out there right now, and it's funny. I remember when she made the statement. I mean, she was like, "This is not advice," but yes, just goes to show you how regulation is kind of a scary thing. And I'm really kind of curious, to see, I mean, regulation is typically a good thing, but right now you're seeing, Bitcoin more or less flat. Ethereum, it's kind of pushing back down again. It's green right now since the open. Yeah, right. And Doji also looks very, very similar. And again, this is kind of back to where that channel kind of ended and then kind of pulled back down again. And the question is, I mean, we're right below 6 right now. 6 is the magic number here. Ethereum is 1,300. We're right there as well. And we know that Bitcoin is 20,000, but now it's kind of becoming more the 19,000 mark. What does this look like going forward? Robert Kiyosaki. Right? He is another one of the big names that says the dollar is about to crash. Right? The dollar is about to crash. Everybody should be buying, Bitcoin now. I don't know. I'm not exactly sure why he thinks the dollar is going to crash. Yes, there's a recession there, but the inflation is so high. I wonder if he understands that, again, if you're getting 4% on your money, you get 0 for holding Bitcoin. But he's convinced that, hey, listen, when the dollar crashes, you got to buy Bitcoin again. I don't know. I mean, it's one of those things. Is it the cool product anymore? Is it where everybody wants to be right now? Or will something kind of replace it? And I feel like it's a valid thing there. You got to ask yourself. If Kim is getting busted and settling immediately, but is still under investigation and could get in more trouble, who's next? Rolling over into commodities. So we already know why oil's up. We already talked about it. We had that trade. Again, we saw this on Friday. It pushed back down. We talked about a profit target. We hit the profit target right on the clock. And you can see that's where we ended for the week. It's almost kind of a confirmation there, right at 96.61. We literally kind of nailed it right to the point. And then all of a sudden OPEC took over, right? Did it have some problems? It did. It absolutely did, right? I mean, there was our confirmation in. There was a new high, and you can see we hit it. We hit it again. It's like, no. And it blew through and then kind of used it, right? I would say right now, I'd probably expect the oil to pull back. A lot of this is kind of news-based stuff. But with, kind of moving this, getting rid of this from the last week stuff, we'll just draw another one. You can see that there was some basing here and there was a pull away and kind of a little bit of a test. I think this is an area that you need to watch out for right here at 82.83. Why is that important? Well, for a number of reasons. We know that oil is a very technically traded asset. Fundamentals for oil are very, very difficult to kind of, it's like, what fundamentals do we use? Do we use future demand? Do we use demand right now? Do we use the inventory reports? It's really a lot harder to truly do like a fundamental picture on oil. There's obviously people out there that try to do it. But I think it's extremely difficult because, fundamentally, it's what? Can you predict China locking down or China having problems with COVID still? No. The globe goes into recession. Can you predict how deep it will be and how long it's going to be? No, not really. I mean, you can guesstimate it, but, even oil inventories, how often are the inventories correct? Very rarely, right? So it's a much more technically traded market. We have demand there. We know that it's confirmed demand. We also know that it's sitting at a 23.6 from the most recent kind of push down. This is the most recent bottom that everybody can see, and everybody knows what the high is here. So I think 82, 83 is definitely an area to watch out for, because a pop from there, I feel like it could. Because remember, Russia's bad. The U.S. is now mouthing off saying we'd crush them if they use nuclear weapons, right? And we're going to do everything. And I don't know if you guys saw it. I guess by doing the annexation, we have decided that now we are putting sanctions on their deputy minister of finance. I'm like, we didn't do that guy already. How do you, a guy that's in charge of finance of the country? We have sanctions on Putin's masseuse, but you don't have it on the deputy finance minister. So I don't know. It's funny. Even harsher, we're going after more people. Okay. I don't know what we're doing, but yeah. So again, they can put more sanctions. Oil goes back up to 100. They are still fueling the war engine. Of course OPEC Plus wants it. They're fueling the engine. Now natural gas is pulling back down again, and we've seen natural gas. We talked about a target of 625. I haven't hit the target yet. I'm close. It made it down, and now it's pulled back a little bit, right? It made it to a low of $6.30. I got close, but I talked about 625 being the target. We're really, 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 really close. And again, the hurricane's not doing anything is fine. Even the Nord pipeline, or the Nord Stream not coming back online and things like that, causing problems. But right now, remember, we are on track, right? We talked about inventories being a problem, and thus far, they decided that they will continue to pay for Russian gas. Remember, they weren't getting Russian gas unless they paid, what Russia wanted. Guess what? They paid Russia what Russia wanted because they were able to accumulate. They still got their natural gas in. They are okay as long as it doesn't turn into a cold winter. It's only October. We just hit October, but right now the forecasts haven't started to turn towards the bad winter. So yeah, right. So right now we are still in a negative pattern for natural gas. I think right now it's completely justified until the next hurricane, next something messes with supply, or we start getting weather reports that they are going to run out. I think, again, it makes sense. I think 625 is still a target. We'll see what it does if that puts a bottom in there. But again, move this across. You can see how close we were, how close proximity we were to that 625. So it's there. It's close. Missed it by 5 cents. So we'll see. I think we get down there. Now gold. Gold taking off. You may say, well, what the heck just happened? And again, look at this. We've hit this 1, 2, 3. When did it break? Number 4. And actually, in all fairness, it did hit and come back again. So technically, this is hit number 5. There's your original formation. There's your 1. There's your 2. There's your 3. And here is 4. This is technically 5. Again, we're not taking anything short after 4 anyway. Typically after 3, we're not taking it. But you may say, why is it exploding right now? Very simply, people are looking at this data and saying, holy crap, this is contraction. Maybe this will slow the Fed down. Will it? Definitely not next time, maybe for the one after that. But because that has the chance that they're not going to keep their foot on the pedal as hard, that is sending gold traders higher. Okay? So, makes complete perfect sense on that one. I think this is great. I love this one. I think this is really, really good for gold. The reason why I say it's really, really gold is because you can see we have a 61.8 coming back. And if you go back and look at this one, you can say, hey, wait a second. We got some stuff sitting right there, as well as a 61.8. Gold is one of those other ones. How do you determine fundamentals for gold? What are the fundamentals for gold? Is it how much they're producing out of the ground? There's a lot of fundamentals for gold that are kind of very hard to read. What season is it? And you may say, why do the seasons matter? Well, there's a gold and wedding season, right? There's a gold season in China. There's definitely a gold season in India, where demand for the actual product itself is big. We know that it is also used in a lot of electronics for industrial metals. That's also a big kind of boom. We know that it has to do with inflation. But right now, I love this spike. It was news originated. We were looking for a top and a turn and rollover back down again. Hopefully, it doesn't jip us on this one. The problem with this one is it may get front run a little bit because it's 61.88, probably 75. Let's see, what does 75 look like? Yeah. I'd say this is probably where your first round of traders are coming in, followed by a close second group up here at 690. Again, parabolic move up. We typically look for reversals of those. I don't think the Fed's changed anything because they got one data point that didn't look wonderful. Again, take it for what it's worth. But again, news-based spike in gold saying that the Fed's going to slow down. Don't know. Don't know. Now, if the Jolts number is low too, that could be the opportunity for another pop. So if we turn and kind of retrace this one back down again, a bad Jolts number tomorrow, again, this is, if it comes in as expected, it came in as expected, right? This comes in a little bit lower, which, I don't know, I feel like it could. If it comes in lower than expected, this is also another pop for tomorrow. Okay, so we'll see where it places us. Maybe there's something cheap in that one because, again, Jolts is not one of those ones that, everybody is familiar with. But yeah, that's popping. And again, silver. Why is silver popping? And again, it's kind of like they knew, right? 8 o'clock, it started to take off. How did they know? It's because the data's already out there. People already know the data. But this one broke through the 78. So we can start changing this one and getting ready for this week trading. We can go low to currently high right now. And again, parabolic move up. We did break through the 2 levels at 20. And again, those aren't fresh levels. Those have been hit multiple times. I can take this one off now. I can take this. That's kind of having problems with that now. We know we got a level up top. Let's pull these 19s out because, again, those fresh levels don't matter. Let's pull these shorts off here. This one got hit. 18's there. The 1786 is good. Let's pull this and pull this. Do I want to use that? We'll leave that one now because the confirmation will pull this one. All right. So that's what we're looking at right now. And again, not a fresh top on this one. This one's been hit a few times. It's an old 78. Pull that across. Do I need that one? This one may have some problems here. Right now or there. This could be the rolling point now. Kind of this 1030 reversal. News is in. We could see a rollback from this one. If you get short this one, I think there's the level that you want to take your profit at. That level is going to be at 1944. 1944 is where that one would be. And again, that's what started the initial push. Yeah, that's where that one would go, coming at. All right. Yeah, I think there'll be a top in there. This is too much of a move too fast. And again, it's a parabolic move on either one. And they're both approaching levels. Okay. All right, VIX. VIX, you can see pulling back down again. And the VIX likes that. The VIX like that news. Again, we're a little bit late. This is the 10 o'clock candle. You may say, why the heck the VIX went down? Well, the news came out and it's showing contraction. Like, isn't that bad? We're showing contraction? No, because again, does that temper the Fed's interest rate, agenda, right? So, I don't know. I don't think it changes too much. It's only one data point. And they said, listen, one data point doesn't sway us. And I think that is the exact thing they should be saying. As one data point cannot give them the whole picture. We don't have a data point that exists that is truly the whole figure. So I think it's good on them. I think the Jolts gives us a better idea because we know that the Jolts data is what they are looking at, right? As far as where the demand is that it's driving companies. We already know the spender is not spending what they spent before, but the demand for jobs is kind of, I think that's the big deal, right? All right, so that's your VIX. Again, dollar. There's what we're talking about. Oh my God, it's a red number. They're contraction. There we go. That's exactly what we're looking at. But we do know that there's dollar here. Whoops. We do know that there is some buying there. They've stepped in the past. Could they step in further? They could. Because again, it's not going to change the Fed. All right, let's go down and look at 15 minutes and check out the ES. And again, is that justified? Absolutely. Absolutely justified. Now your 930 candle is here. All right, so let's see. Could we have gotten a level of basing? There's a level there. I mean, that is the closest level right there as far as basing goes. Is it huge? No, I'd say that the main basing is down here. So again, depending on how aggressively you would have drawn this one, it's absolutely an entry. Again, you had an impulse and a correction, a pullback. There was your kind of pausing in the overnight at 715, right? So it is technically a true setup. I mean, again, you are getting the red pullback, what we're looking for. And we wanted to kind of grab the full base. It's a decent little base in there. So, let's see, long-wise. I don't know. This one's close. Right there. So it's out. Right? There you go. It's out. And again, it's about finding those proper bases. Now, this one, you may have been a little bit concerned. Again, there are some levels sitting over here. We do know that it turned from here. So again, you may have looked at this and said, well, wait a second. I know I got a base over here and I only have 1 to 2.2. Yeah, that is true. That is true. So you may have said, I don't have enough room to run on that one. The other peak on top, You may say, okay, well, this is a little farther out. There is a peak here, right? Yes, that was also one, but that was beyond. So it's kind of, the question is, are you willing to kind of play with this one? And again, it was formed in this little base right here. Pause at like 1 o'clock in the afternoon on a Friday. Not necessarily a bad trade. Not necessarily a bad trade. So again, depending on your aggressiveness, you may or may have gotten in, but again, it did qualify. NQ. NQ. So NQ also had a little base here, and I would say this is kind of the same thing. There's your base and kind of a little bit of a confirmation step. It did make it. It did not get stopped out, again, using the basing level there, right? This one obviously passed. You can tell this one without a doubt. And let's see. Whoops. Nope. Go back. That's not what I wanted to move. I wanted to move this one here, and I wanted to move this one to right there. Okay. And again, very fast. Now, same thing on this one as a pullback. You may look at this and say, okay, is this a big push? It was an old violated zone. It did kind of come back again, but I wouldn't say that it's super clear. There's a little one up here, but I would say that this one up top, this kind of base here and then punch through, this was a little bit better. Kind of where we're at right now, that's probably where I would put it. So of the two setups, I like NQ actually better than ES, but yes, it was already kind of moving up again. If you look to see the direction from 9 o'clock to 9:30, it is pushing straight down. And again, that's one of the rules of the class. If you can't tell, my voice is a little bit hoarse. I did not get to record yesterday, get to fix the sections that I needed to fix. We had the tournament on Saturday, and again, I was kind of hurting yesterday with voice. And it's starting to go right now anyway, so unfortunately I was not able to do it. So I'm hoping this week I can get it finished up. I know I keep saying that, but it seems like there's one thing after another that just keeps stepping in the way. So trying, guys, trying. But I'm glad I reviewed it. And I actually, the one that I did re-record, I'm glad I re-recorded it. I was able to add some things to it that I didn't have the first time. And when I went back and kind of proofread it the second time, I liked it much better. I'm glad that I did. So again, that's what happens. If I watch courses now, I'm like, you know what? I should have added that. I should have done this. Like I always like hindsight is 2020. I'm glad I did it for this one. YM. YM had the same pullback, and again, easy zone to see here. I was in 8 o'clock zone, and again, you can see the 9:30 candle pull back. 9 and 9:30 was straight down. This one, there is your base. There's your touch. This one obviously well past as well. 1 to 3 is only right there, so you can see money left on the table. And this one, from that level, you can see it kind of pushed deep in there. Again, yeah, there was a zone there, but it pushed pretty deep. And again, that was a 1 o'clock level on Friday. Not as concerned about it. The next level was up kind of where we're at right now, but well past the 1 to 3. So again, there's another one in the road. Again, yeah, this was what, 198 points on this one for a 1 to 3. So, I mean, how many points is this? 39, right? That's a decent move. 103, and then 198. Russell. Oh, look at Russell. Russell's always the guy that has to screw up. Now, Russell, 9 and 9:30. It started up here at 9:30. I would say, again, let's be fair on this one. If there was the zone you were using, if you used an options-based product, this doesn't matter. If you use a futures-based product, this stopped you out, right? Now, here's the big question. If you use that, and again, we're drawing the same way we drew all of them. Right now, your 1 to 3 is sitting right there. It got close, 3.2. You have not actually been taken out of this trade yet. So, now again, could you lock it in? Again, knowing that it's 10:30 right now, this is when reversals happen. Could you lock it in right now at a 1 to 2.5? Yes, you could lock it in at a 1 to 2.5 right now. But there's 1 to 3 sitting right there based off that level. Again, some people like futures, some people like options. The reality is you could add 4 different entries. If you took futures, you were 3 for 4 as far as profit targets go. If you were with options, you are absolutely 3 out of 4 right now. And this one is probably, again, you're locked into profit already. You're not going to lose money on this deal right now unless it literally gaps all the way past. And if you close it down right now for a 1 to 2.5, you made 3, 3, 3, and then 2.5. What's that? 9. It's 11 and a half today. You took basically what? 4 risk for actually be more than that. Oh no, it wouldn't. No, that'd be right because it would be 4 for 12. So not too shabby, right? So even futures wise, you lost 1 and you're at 11. So not too bad, and it looks like this one's going to hit as well. So good day for the the opening print strategy. So gotta love it. All right, 10:35. Let me drag in the other window. God, I gotta find it. Is it this one? This one? Here it is. There it is. There it is. Right here. Let's pull it in. All right, we got 9 in. We got 11 tickets purchased for today. So, with that said, let's close it down for the day and see who the winner is. I know Ernest won on Friday. What are you doing? What are you doing here, dude? You knew that you won on Friday. All right. Only doing 2. I think he forgot. It's Monday. I think Ernest has a case of the Mondays. Actually, the 2 of these guys, look at this. They're both slipping today. Right? They're both slipping. All right. Winner of today's drawing is Jeff. Go, Jeff. Jeff, is this your first win? I feel like this is Jeff's first win. Right? I feel like it. Look at this. I feel like it's your first win, Jeff. All right. Let's give Jeff. I'm going to have to copy this too, Jeff, because I don't know where you're on the list because you just started attending these sessions. So let's see. Let's see where Jeff is. Position 32. All right. So let's go down. 32 right there. Let's give you your 25 and see how that jumps you. There you go. It only jumps you 1. You got a little bit in there. Carol's in there. Hope Carol's okay. I haven't talked to her for a while. Carol was struggling a little bit with MT4, but she was starting to get it, so hopefully it made sense. All right, so ban Jeff before he takes over. Jeff wins one time, and Ernest is like, "That's it. He's taking over. He's trending. He's trending. We got to stop the trend right now." Ooh, look at this. U.S. construction spending down 0.7% too. So yeah, you don't like to see spending down. Yeah. So, all right. So. Hopefully everybody made it out safe and sound. Nobody had any major issues with the hurricane. I know some of you are down south. A lot of you are Texas, and some of you are West Coast. Some of you are north. You guys are all over the place. I know that. But hopefully, again, everybody that's down south made it out okay. With that said, I'll catch you guys tomorrow. Thank you for joining me today. But we'll be back on tomorrow morning at 9:30 Eastern time. With that, I'm out of here. You guys have a good one. And if you need me, shoot me a message on Discord. Take care.